Good evening, everybody. Luke Gromen, founder and president of FFTT, Force for the Trees. Thanks for joining us again on a Sunday night. Two things that grabbed my attention recently. I'm going to highlight a couple quick things here, and I already have a couple questions, and then we will open things up for questions for a bit as well. First thing is that the U.S. economy had been slowing. We've been seeing that. We've had oil down big off the highs in the last few weeks. I think it's interesting in the last week. Number one, you've seen a lot more mainstream Wall Street economists starting to notice it and talk about it vis-a-vis the Fed. And then I think most importantly last week, you had three different Fed officials make mention of the slowing global economy, And so I think that's an important milestone in terms of the Fed admitting that they see it. Let's see how we go from here, but I think that that is an important thing. Second thing we had is that you're starting to see a change in the narrative. We've seen Saudi, of course, Friday night, Saudi, I would call it vilified over the Khashoggi killing, CIA saying effectively MBS ordered it. You've had 13 countries saying they are interested in buying Russian S-400s. Missile systems, despite the risk of U.S. sanctions. You had the World Gold Council chief economist on Thursday highlighting that they're doing a lot more work and noting how many global central banks are buying gold, and that's something they're going to be doing more work on. And then, you've seen highlights in FT that American executives are becoming China skeptics, and I think that's interesting. All of these things, to me, on their own are interesting. When you start putting these stories in particular and stories like them more broadly into a broader mosaic, they're all pointing to things that you would expect to see as mile markers during a change in the system. Sort of 2A or number 3 as a bonus this week that I would highlight that just hit this week. Quote unquote chaos at the APEC meeting, as this was the first time they couldn't come together with a joint pronouncement, and that was based solely on what they called the two elephants in the room, U.S. and China, not being able to agree on what was said. And so it seems like the narrative is really changing in a big way. Again, not any one data point, but the cadence of the data points and what we're seeing with those data points I think are important to note. So those are the two things that have really grabbed my attention. I'm going to jump over to a couple quick questions here to start, and then we'll open up the floor, if you will, for other questions. First question is Luke, if the U.S. changes back to a sort of a more Bretton Woods type system that you would have to, if the U.S. wants to win the trade war, they've got to go, the dollar's reserve status as structured cannot continue in the form it is. They said, what are the negative consequences to things important to the U.S. middle class, 401k equity levels, borrowing, real estate values, interest rates, inflation, etc.? Are we talking about a massive and widespread revaluations? The short answer is yes, I think it would have massive implications. I think it would be potentially bumpy in the near term. I think it might require the Fed to perhaps cap interest rates in the near term. But ultimately, to things very important to the middle class, it would be very bullish for asset prices, broadly speaking, in particular risk assets like equities. It would be, again, it would probably drive interest rates higher. I would think that would be a negative all else equal, but I think the Fed would probably be called into keeping them at an economically suitable level. That too would be positive for risk, bad for the dollar. It would be very positive for wage growth, for middle class job growth. All of these things would be positive. It'd be really negative if you've got too much of your 401k or your pension in bonds, and in particular sovereign bonds or fixed rate bonds. And so that's how I'd answer that. The second question was, Luke, can you elaborate on the Basel III and gold being elevated to a Tier 1 asset currency versus commodity? Does this mean gold is being accumulated by banks for an eventual repricing? And excellent tree rings this week, and thank you very much for that. In case you guys didn't see it, it was pointed out to me. I'm as deep in the weeds on a lot of this stuff as anybody, I would say. But I had not seen that the Basel III, banking rules received reforms last December, which elevated gold in certain circumstances to a Tier 1 asset. In other words, banks could hold physical gold as long as it had a matching liability against it. And there would be no risk weighting to it, which is a big change from Basel III rules as they were written back in either 12 or 13, whenever that was. And it would effectively, at least partially, put gold on par with sovereign debt in terms of its risk weighting or cash, which is a big change. To me, I don't want to make too much of it other than to say that the BIS is the central banker's central bank. They make the rules. You got to follow the rules, and they're moving gold back into the system. And I think that to me is the biggest takeaway to this. You can see it is crystal clear in the data. Global central banks have bought more gold on net than they have treasuries over the last 5 years. In fact, they have net sold around $30 billion in treasuries and bought about $120 billion in physical gold. And so clearly gold is gaining share from treasuries as a primary global reserve asset. This to me says the BIS is on board with this, and so in terms of gold moving back into the system as a reserve asset, not necessarily a gold standard, and there's an important, those are important differentiations. So let's see what other questions we have out there. When what? I'm not sure when. The gold, the reform. If you're talking about the reforms on gold from the BIS, they were put into place last December. They go live in January of this year, which is interesting. Any other questions we have out there today? Let's see. I'm going to wait a few more minutes. While you're waiting, if you're interested in hearing more about our research, and if you do like these types of conversations, check out our website, FFTT-LLC.com. We've got a number of different research offerings there. Tree Rings is one of those products that we've had a lot of great feedback from people on, so check that out online. Let's see, what other questions we have out there? Anything? Anybody? Nope, doesn't look like it tonight. All right, guys. Well, if you have any other questions, hit me up. Otherwise, like I said, check out our website. And thanks for tuning in. And we will talk with you guys soon. Take care, everybody.